I want to talk to you a little bit about the jobs in terms of office spaces. I've heard you talk about the balance sheet issue, and we know there's close to $1 trillion of office space coming due. You've said a nice little recession is going to bring people back to these office spaces.
Happened today.
Exactly.
IBM said you have to go back to work.
So, but this is a uniquely U.S. problem, you say.
Well,
now,
we would have a problem in real estate, in every sector of real estate, not just office, because of the 500 basis point increase in rates that was vertical. The fact that one asset class never recovered, people never went back to work in the United States, in the office market has an existential crisis right now. And so, it's a $3 trillion asset class that's probably worth $1.8 trillion. There's $1.2 trillion of losses spread somewhere, and nobody knows exactly where it all is. And Signature Bank was sold, and we bid on it. There were buildings in New York that were $100 million. The guy bought it for $200, the loan was $100, we thought it was worth $30 million. There's a building for sale right now in San Francisco, it was bought for $850 a foot, the loan was $450 a foot, they'll sell it for $250 a foot. I mean, that's 25 cents on the dollar. That would mean we lost 3/4 of the total asset class. Now, this asset class is not just owned by rich people, it's owned by pension plans and other people, small investors. We're not just talking about towers, we're talking about the buildings that surround towns and municipalities. But
what happens to those cities? What happens with
there is a bright spot. The office situation is a completely U.S. phenomenon. I just was in Munich last week, and rents in Munich are up 15%. The vacancy rate in Munich is 2% for Class A. In Seoul, Korea, it's 1%. In Tokyo, it's 4%. Everyone's back to work except for Americans. We've gone off the deep end. We don't show up for work, we don't apply for jobs, and we don't feel like we have to go back to the office.